Good evening, everybody, and welcome. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading futures markets using the Viper tools, you're absolutely in the right place. First of all, we've got to go ahead and knock out our standard disclaimer before we can show charts and trades. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, before I start, I do have a question. I want to find out how many of you, what instruments you like to trade, so I can get them on the docket to get covered tonight. Just whatever future instrument or instruments that you like. Go ahead and please type them in, and I will try to cover as much ground as I can tonight. Okay, let's see here. We've got ES, correlations, Trifone, okay. Some more ES from Jim. Alan, hey, Alan, crude and gold. We'll get crude up here, no problem. Oh, excuse me. Got a little tickle in my nose there. Ooh, we got a NASDAQ in here too. Okay. A lot of ES, a lot of crude, a lot of gold. Okay, so we got to take care of that. We got a YME in here with radon. Another NASDAQ from Greg G. Okay. Turkish lira. Come on, Gene. I know you're about to get funded. That's funny. That's a good one. That's a good one. Okay. All right. Let's get over to screen one. I'm going to start with YM and ES, and then we'll work out into those other instruments. Okay. All right. Here we go. Screen one. Here we go. Okay. Here we go. All right. You should see YM and an ES chart. A YM and an ES chart. You do? David H., there is sound. If you're not hearing it, you're going to need to log out and log back in. Of course, it's hard because he can't hear it. You're getting nothing. Here, let me do it this way. I guess this is the only way to do it. Hold on. Let me send him a message. Let me send him an SOS. Hold on. David H., sound is on. Please log out and back in. There you go. Boom. Okay, that solved that problem. Okay. All right. So here's what we want to do. We want to talk about perfect trade entries, and how I'd like to frame that is in this following context. So some of you are new, so I'm going to take just a few seconds here to explain what you're looking at. Let me focus on the ES chart before we get into matching up correlations on charts and all that sort of stuff. This is a 2 range chart. I like a 2. We show and trade the 4 in the room. The reason I use the 2 is I get a lot more data around entry points. I get twice as many candles, and I like that. I like to see more detail. On a 4, for instance, see how it's bouncing right here? Like this would all be just like one big candle right here, right, where you're looking to get in on a bounce, right? See here where you get this little sort of V entry here, and over here you get a lot of nice candles showing a lot of definition around here. I like that. You don't have to use a 2. You can use a 4. 4 is perfectly fine. And so our standard indicators from Viper Trading Systems are the background colors, the bar colors, the power meters, which are the various trends on the chart, predictors. You've seen those in the room. This is our alerts. This is our alerts. Long, when you're uptrend, you want to get long alerts. When you're a downtrend, you get the short alerts. Of course, the bands, the thick line in the middle is the mid band, and we have 4 bands above it, 4 below it. And I've added the current day indicator open, high, low, which is the lines. The white dashed line is the low of the day. The black dashed line is the open of the day. And the blue dashed line is the high of the day. That's just colors I've picked. There's no real mystery around it. And so one of the first things that we do is we need to determine what the trend is. That's one of the number one things in the morning when you fire up your charts and you're getting ready to trade and you're studying the pre-market action. You have to determine what the trend is. Now, I'm going to skip over the part of the instrument selection. So I noticed there was a good, healthy list from everybody in here, a good mixture of ES, crude, and gold. So you got precious metals, you got commodities with crude, you got equities with ES and YM and NASDAQ. So that's good. I would strongly urge you as you're learning this to not take on more than one or two instruments as you learn. Find an instrument you really like and get really good at it. If you find that you're trading a particular instrument and it's too whippy for you, try something else. Okay? So instrument selection, I'm just going to assume that you're going to do your due diligence on your own with that. So when we look at the overnight session, so midnight, I'm here in California, most of you know that, of course, and the midnight hour was right here. Oopsie. Midnight hour was right there, okay? And so most of you, of course, know that that overnight, this is the Asian trading session. It starts at 5 o'clock. In fact, it's just starting right now today. It's the Asian trading session overnight in the futures. So the market closes at like 1 o'clock my time. So the actual close from yesterday is right here. Somewhere right in here, 1:15. And then shortly thereafter, you have a 15-minute pause where the markets are all quiet, and then they fire back up. So as you can notice right here, I want to just take a second and show this. If you put this on your charts, you're going to notice that in the beginning when a market opens, this would have been yesterday at the beginning of the Asian session right here, that all these lines are sort of bunched together. See that? So here was your low at the open, here was your open, here was actually your open, the black dashed line is the open of that market, and then the blue is the high. So right away you got a sort of a push up, and keep in mind that we are what you call retracement traders, pullback traders. In other words, we look to identify a trend or a range. We look to identify whether we're going to want to get long or short, and then we are going to patiently wait for pullbacks. So let me show you one here after the market opened yesterday on ES. So here's our push. The background had already turned green. Can everybody see that? So let's look at some observations that we look at when we try to determine the trend, and they're pretty straightforward. So here we can clearly see the mid-band and all the bands were stair-stepping up. With this push right here, the background had turned green, and we had primarily blue bars. This is telling you, this is the clearly identifying what's called an uptrend. So if you think about it, in the uptrend, the thrust direction is obviously up. So how do you know when you're thrusting? Well, you can see here clearly at the 1500 hour into 1510 and 1615 that the mid-band and all the bands were stair-stepping up, right? We can see that we were putting in fresh highs as this blue line was taken out tick by tick by tick until we got to here, and we peak. So at the end of every thrust period, there will be a peak, and what will happen is that you will get, in the case of taking out fresh highs, that this dashed line will stay in one place because you have not broken it yet. Then we go into a small period of consolidation. So in this area right here that I'm circling with my cursor, are you looking to take long trades or short trades? Just type in an L or an S. Right in this area right here where I'm circling with my cursor. This is the Asian trading session from last night. Just type in an L or S. You got 5 seconds. Cast your vote. L or S in this region right here. Three seconds. L or an S. Just go L, long, boop. Cast your vote. S, short, boop. 2 seconds. Long or short in the Asian trading session on ES. 1 second. Cast your vote. What would you, if you saw this, if you were a night owl last night and you were trading ES, what are you doing? Are you buying support or selling resistance? Long or short? Time's up. Longs only. Good. Longs only. The trend is up. So now for simplicity's sake, in the room, you're going to hear several different types of trade calls. You're going to hear what's called a minimum criteria trade. Okay. I'm not going to cover that tonight. Just a heads up. Okay. I'm going to keep it really super simple. You're going to hear a deep retracement trade. You're going to hear phantom trades, all kinds of different trades set up. What I'm going to teach and focus on tonight is solely mid-band trades only. Okay, let me define that for you so you're really clear on what that is. When the bars enter this area right here, it's defined as bars that come into the band immediately above the midband, bars that come into the band immediately below the midband, and or bars that sit directly on the midband itself. This is the definition of a midband trade. Whether you're getting long or short, the definition is the same. The only difference is the directional the trade direction that you take. In the case of the uptrend here, you're only taking longs. So you're looking to buy a support level. Okay? Now, in the case of the short, and we'll look at some shorts, the opposite is true. You're looking for a market to come up like this, enter the midband area, and then you will sell or short what we call a kiss and roll off of resistance like such. That is how you deal with a downtrend in a shorting downtrending market. Okay? All right. Now, where this gets tricky, on the surface you might say, well, you know what? That's pretty simple, Charles. I think I can get my head around that. Well, here's where the rub comes in. Okay? As these markets are pulling back into this area, which is our sweet spot for taking a trade, they do not all, how would you say, behave the same way. Okay, they don't all behave the same way, and that's kind of a fancy way of saying that you don't know a lot of times when or where the bounce is going to occur. Sometimes the bars will come down here, kind of dink around the midband for a little bit. Sometimes they'll come just underneath the midband a little bit. Maybe they'll turn yellow or red. Sometimes they'll go right here, just a little bit above the midband, like these, right here. Now, like I said, for simplicity's sake, I'm not going to address trades that occur in here, and I'm not going to address trades that happen way down in here. I'm going to leave those off the pike for right now. So now then becomes the question of when the bars get into your sweet spot of your opportunity zone to take a trade, which is this rectangle right here, and this rectangle right here, how do you know when to get in? How do you know? That's a question. In fact, I'll put it right on the chart. See if anybody knows. How do you know when to take the trade? And then I'm going to put a blank here, and you're going to go ahead and fill that in. What's your answer to that? Collectively as a team here tonight, what is your answer to this question, this fundamental question in regards to your trade entry? So just to back up, as you're pondering the answer to that question, we have identified the fact that we are in an uptrend. Step 1 is complete. We know we want to take long trades only. Step 2. We know we want to take mid-band trades when the market comes into this sweet spot right here. Step 3. Now we need to answer this question. Now here's where the rubber meets the road. How do you know when to get in? You want some help? Anybody? Let's see here. Trafone. When Gary tells me to. Okay, well that's one of, if you're not in the room, that's going to be kind of tough. I know you're joking around, Trafone. At the lows, close above a box, break of a high candle that's a bounce candle. That's the question. That's the rub. I don't know. Okay, cool. All right, good. All right. Let me show you some techniques that I think are going to help you a lot. Okay. There are several ways to know, and I'm going to address a couple of them right now that's going to help you. Let me see if I can do it this way. I'm going to really, really, really blow this up super huge big so you have an idea what I'm talking about. I'm going to take these off for now. Okay. We're going to do a little exercise together, and it's going to take a little bit of a while, but please be patient because we're going to work together on this, and it's going to help you a lot, like tomorrow morning and next week when you start looking at taking these trades. It's going to help you a lot. Follow along with me, okay? Is this bar in our sweet spot? Yes or no? I'm going to do this pretty quick. Is this bar in our sweet spot? What's the first bar that goes into the area for us to even consider taking a trade? Let me ask it this one. When you think you see a bar that's gone into the sweet spot for us to take a trade, you type in the letter Y, signifying that yes, that's the bar that is entering the sweet spot zone to take a trade. Okay, I did this one, everybody said no. Okay, how about that one? No. Okay, good. How about that one? Okay, how about that one? Okay, how about this one? And how about this one? Do we get any yeses yet? Are we in the sweet spot yet to take the trade yet with that and this and this? Yes, good. Everybody's saying yes. Good. So that's the first thing. Okay? So think of it this way. Here's sort of a mental, here's a good way to do this, okay? Do this. As long as these bars are closing above here, do we care about them? Are we going to take a trade up here? For the purposes of our definition of only taking mid-band trades, if the bars are above that line, we don't care. We're not taking trades up there, right? When this bar, with this little doji bar, closes down into our sweet spot area, now we got to start perking our little trading ears up and our spidey sense and say, ho, 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 wait a minute. We are entering the sweet spot zone where I need to start looking for a trade. Now, notice how all these bars in the retracement are closing down. Close down, close down, stuck. Close down, close down. What about that bar right there? What about this bar? Oops. Looks like it closed up. How about that bar? What's that one doing? And you have a couple more that close down, and then these start closing what direction? What direction are those closing? Until this little doji reversal. Up. Well, you can see they're closing up. They're closing up. Is that close? Well, when a bar, here, let me help. Some of you might not know. Okay, so when a bar closes down, you're going to get a wick on the top, right? Because it's closing at the low of the bar. The close of this bar is right here. So it closed down, right? Here, it's hard to say. I don't know exactly where it closed. It might have closed up or down. Doesn't really matter. Here's another doji. Here's another doji. And here, it's trying to reverse. You can also draw a trend line over the tops of the candles that would look something like this. Right? So would you agree that the entry, a good entry would be on the close of this bar right here, or even the close of this bar right here? Now, how do you get in? What we teach and we suggest that you try to do is learn how to use what's called the object trader tool that Gary has, hours of teaching on how to use. It's a panel. It's a semi-automated strategy in a panel on the right-hand side of your chart. And if you do that, we created that tool so that you could engulf these candles with what's called a object trader region box. It would look like this. So if you're completely new, it's a tool that uses objects to get into trades. And the way it works is you engulf these candles with a box, and when it closes outside of it, you're filled long. Okay? Now, is there other ways to get in? Yes. What are some other ways that you could get in when you're looking to get in this trade? What might be some other ways you could get in? In fact, let me move it over here. Any thoughts? Any thoughts? Market orders? Limit orders? How might that look? Here, let's do one together. Let's say you didn't have a box and you want to get in. Well, could you put a buy limit order in right at the top of that candle right there? Like that? Could you put a buy limit order right there? And you're filled as it comes up through it? As these bars are forming, could you hit a market order? Sure. Could you put an order when it breaks this line? That's in the Object Trader tool too. So we just told you 4 ways to get in. Region box, trend line, limit order, market order. 4 ways to get in. Right. Everybody see that? So you're long from here, you're filled long by hook or by crook, whatever methodology you got in, and you're long from here. Now, we talked about the strategy of trying to put 2 contracts on. And I have an extensive explanation of that in a webinar recording that I'm going to show you. I'm not going to get, it's going to take half the thing to explain all of it. But the bottom line is that you put a 2 lot on here. Now, if you put a limit order in, you've got to actually put your own stops in. So you come below here, you identify a swing under the midband, and you put your initial stops right here. Now on ES, we're trying to get a scalp trade. Where might the scalp trade be located? Well, how many ticks do we want to get on a scalp? On ES. It kind of varies depending on the instrument and the volatility. ES sometimes doesn't have a lot of movement. So where might be an area to peel off the first contract on this chart? Where might it be? Let me give you some ideas. Could it be right here? Well, that looks like it's only about 5 or 6 ticks. That's not very much. Could it be at 97? Line 6? Should it be all the way up here? Yeah. Yeah, you want to go 6 to 8 ticks on a scalp. 6 to 8 ticks on a scalp. So if I do my math correctly, from 95 to 97 is 8 ticks. So your scalp trade would come off here. That would be your first contract, okay? So boom, contract number 1 is off. Now, if you're doing it manually with a limit order, you got 2 limit stops down here. What do you do with that? Convert it to 1 and bring it to within 2 or 3 ticks of your entry. So now you got the free trade, right? So you're going to come right up like into here. Okay? So you're going to go maybe 3 ticks behind your entry. So let's see what happens to this trade. Okay, here your scalpy comes off. See it? Scalpy's off the table. You're up 8 ticks. And then you engage the runner. Now, normally what would happen is a stealth would show up here. I don't see the stealth showing up, but you would have to you don't leave this stop all the way down here. After the market starts moving in your favor, normally there would be a stealth line that would show up right here, and you would start to ratchet it up behind it. See it? You start going up, you start going up. You thought you were going to get the top, and you don't get it. And so right in here, contract 2 would come off. Now here again, Object Trader would do this automatically for you. But if you do it yourself, you're going to have to manually move these stops and targets around yourself. Okay, you just don't, here's what we find a lot of traders do. They'll get up, 8, 10, 12, 15 ticks or whatever, and then you think what's going to happen is that it's going to, go to the moon and take off, and you're going to be like, oh, well, I can just hold this trade all day. I don't have to move anything around. I'll just sit here, and it's going to run 100 ticks, and I'll just sit here and just collect, just ching, 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 collect money. Is that a good idea? To not move your stops around and get your targets where they should be? You think that's a good idea? Anybody? Or do you think you should be proactive in managing your trade? What do you think? How often do you get into a trade and it just runs 100 ticks and never looks back? Does that happen very often? It does once in a while. You'll never go broke taking a profit. I love it. Good, 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 good. Okay, good, good deal. All right, perfect. Good. Yeah, so no, you want to actively manage your trade, all right? If you use the Object Trader tool, and you use the box, it will automatically put the targets and stops in for you. It'll manage everything. It's once you draw the box and engage it, you're good to go. But if you're going to manually do it, then you have to move things around. Okay? All right. So this one stops out, and I'll do one more with you real quick, and then I want to look at something else. Take this off. That trade's done. So you got a scalp, your runner got stopped out, and now you're out. You're flat. Okay, now let's do an exercise together on another pullback that looks like it's going to start to happen after this one closed out. And when you get ready, when you think you're getting the bars to take the trade, you type in the letter N for now. Okay? You ready to start the exercise? I'm going to do another retracement on ES in this same setup. Very similar. It's going to be very similar. Not exactly the same. It's going to be very similar. And when you think the trade setup is present and you want to pull the trigger and get long, you type in, well, you can type in L for long or N for now. Ready? Here we go. About halfway through this, I'm going to do something that's going to help you. Okay, so you're getting some bars pulling back. See the bars pulling back, bars pulling back, bars pulling back. Okay, hold on. Hold on. Let me do something that's going to help you. You can do this yourself, too. We're going to put a retracement ray that's going to look like this. Okay, here's a ray. This is the ray tool. You can use this in Object Trader tool. There is a tool in there that will do when you draw the ray and you activate it like a box. When it closes above it, you will get long. All right, let me continue the retracement. Now you're looking for a long entry. Ready? Here we go. You're at 1902. We're well into the Asian trading session, so this was last night. It's 1905. That would be 7:05 p.m. my time. So it's not too late in the evening if you're an evening trader. Okay. All right. Let's see what happens next. Okay. I sat here for a while, 1902 to 1917. That was about 10-15 minutes. Plenty of time to think about what you're going to do. It's not screaming, smoking. That's the way ES is, right? Okay, let me do that sequence again. Okay, we're coming down. We don't care about those bars yet, right? We're not in our sweet spot yet. Don't care about those. Okay, wait a minute. Okay, now I'm starting to break into our zone right there with that one, right? Aren't we in our sweet spot right there? Okay. All right. How about that one? Okay. How about that one? Remember our little exercise over here where we're trying to figure out which one starts to close up? Remember our little exercise we did together? Okay. Okay, how about that one? Okay, here we go. How about those two? Okay, let's keep going. How about now? Too late. Too slow elbow. So what I'm identifying here is the primary problem that most traders run into. And I hear this all the time. I hear it in a live room. I hear it in webinars. Occasionally I'll Skype with people and they'll talk about it. If you're saying that you're getting in on these bars up here, you're too late. You missed it. People, traders, and market participants around the world have already entered this trade from down here. Those traders and market participants who are getting long are in from here. These were the bars where you should have said long, right there. Or if you were a little bit late, and it would have been perfectly acceptable, and some of you did this, you would have got in on probably this bar right here. One of these bars would be also acceptable, long. But many long L's and N's came in when these bars were forming, and that is a no-no. No. Everybody, market participants who are long from there are already taking their scalp coin up here. See it? You're already 12 ticks off the entry. So how do you fix that? That's a really important problem and something that really blows out traders all the time, and we need to address it. Here's what you need to do. You take your chosen instrument. I happen to like ES, but maybe it's crude or gold or whatever. Okay? And I want you to do this exercise if you can. Go find a chart on any given day or morning or whenever you like to trade. Say it's from 6:30 to 8 or whatever in the morning or whatever your local time zone is, and toggle back and forth to see. This is on Pacific time. That's right, Kevin. Yeah. So right now it's 5:34. So adjust that to your time zone. If you're in the East Coast, it's 8:30. Right? If you're Central Time, you can do the math. It's 2 hours, whatever. So yeah, here's a good exercise. This is something that doesn't take you a lot of time. You don't need all kind of special data connections and replay buttons and all manner of things like that. Okay, you just run it. You just do this exercise like this. I'm going to show you. I'm going to clean all this off, and I'm going to show you something. Take all this stuff off of here. I'm just clean all this up. All right. And you toggle back and forth. First of all, you identify a trade that you know you should see to get in, whether it's long or short. It doesn't matter. You pick a trade entry that you see that you know that you need to be able to identify, like here and here. And then what you do is this. You go ahead and you toggle back and forth, just like I'm going to do right now. Okay, so the bars are above the band. We don't really not paying too much attention. We're observing it. We're anticipating. We're thinking in our heads. We're saying to ourselves, "Now wait a minute. Wait a minute. We're getting close to where I'm starting to want to get in here, right? If I get some bars bipping down into here, I better get ready to take a trade." That doesn't mean that you're taking a sip of coffee and refreshing your Coca-Cola and petting your dog. This is Super Bowl time here. This is where the rubber meets the road. This is where you're going to make money. Okay, when this thing's running up, if you're not in a trade, there's nothing you can do, right? I mean, you can watch it if you want, but there's nothing you can do. This is the thrust. We're pulling back. We're pulling back. We're pulling back. We're waiting for it to get into here. Now, when the bars start to enter, just like we showed before, just like that. Now your spidey sense is awakened. Yes? Now you're looking at it and you're saying to yourself, wait, hold on. Stand by, please. We are entering, we're not only in the zone, but these two bars right here are getting close to the mid-band. You must prepare for a bounce. That's when you step in and you either put your buy order in here, right? That's when you hit the market buy button. That's when you take your object trader tool that you learned how to use and you draw your region box right in here. Or that's when you come in and you draw your ray tool over here like we showed how to do right here, like this on this retracement, just like that, right? This is where you're getting ready to pull the trigger. Here, not up here. And you toggle back and forth like this. Oh yeah, it bounced. Look at that. Look at that. There's the scalp. And you do it again. And you come back and you look at that. That was a bounce. I should have seen that. I should have taken that. Look at that. There's 8, 10 ticks just like that. And you do it again. You do another one. You come back over here and you do this one. I don't care about these bars yet. They're not in the zone, right? I'm not too concerned. I can't trade these bars yet, right? See it? I can't trade those bars yet. I can't trade those bars. Wait. Now this one here. Hold on. Wait. Not that one. That one. In fact, you should know and you observe as you get better at this, isn't that bar getting awful close to where you got into the last trade right here? It's almost right at it. Aren't these bars that are coming down right here almost exactly where you got in before? Here and here? See it? It closes up. Closes up. Now, if you had time to draw the box, which you had 15 minutes, there was plenty of time to draw a box here. But if you didn't draw a box, you could do a market order. You could put a limit order just like the other one, right? Same exact exercise. There's your limit order. There's your market order. Your ray, I draw the ray. I showed you the ray, right? Ray would get you in a little bit later on that bar right there when it crossed it. See it? And you toggle back and forth. And you toggle back and forth. And you toggle back and forth just like that. Just like that. So what's going to happen if you get good muscle memory on these trade entries and you toggle back and forth and you watch your chosen instrument and you practice? When you get into a live data situation, what do you think should happen? Practice, toggling back and forth, just like I'm showing right here. Just exactly like that. trade after trade after trade in the sweet spot. Then you get a live data connection in the morning, right? Yeah, you get the muscle memory. You automatically know. I automatically know now. These bars come into here. I automatically know what I'm going to do. I'm going to pull the trigger. I might hit a market order. If I have time, I'll draw a box. I might hit a limit order. If I don't have time, it's moving quickly. Muscle memory, time exposure to the charts are what's going to help make you a very successful futures trader. What I'm showing you right here is going to put money in your trading account. It's going to make you money. This is how you're going to do it. Forget about everything else. All that other stuff, don't worry about it. It doesn't matter. If you can memorize a good trade entry, because wouldn't you agree that getting in late, way up here, when people are taking profits is the most frustrating thing in the world when you're trading? You're filled way up here somewhere. You're like, what's happening is you didn't pull it here. You didn't pull it here. You didn't pull it here. So blah, 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 blah. And by the time these bars are forming, you're like, oh, you'll say one of two things to yourself. Well, I'm kind of late, but, maybe it's going to blow that top out. Maybe I should get in. Oh, but wait a minute. No, what if it pulls all the way back here and gets my stop? That's a 12-tick hit on 2. That's not good on ES. I'm going to get, but I'll skip it. I'll skip this one. I missed it. Well, what happened to this? Let's see what happened to this trade. Let's just advance it like this. Takes out the high of the day. Runs all the way to 02. Runs all the way to 07. Runs all the way to 08. Maybe you stopped out here. So what did that trade turn into? Maybe you got out somewhere in here on a stop out. So you got filled down here. Let's figure out what that trade was worth on your runner or runners. So hypothetically, let's use a round number. You were filled, I don't know, let's use 96. I don't have to figure out all kind of ticks and everything. 96. You got in at 96, okay? And you run, and you get out at 06. That's 10 handles. What's 10 handles on on ES? 10 points. 10 points times how much a point? How much is ES? Anybody know what ES is worth a point? 10 times what? Well, I think it's 4 ticks at 12.50 each is 50 a point, right? Yeah, 5 bones. 5 bones a contract. Yeah. And maybe you got a scalp off for 8 ticks down here, so that's another bone. So, if you took the scalp, ran the trail, 6 bones, less commission. If you did it with 2 here, 2 on the scalp, 2 on the runner, that'd be 12 bones, less commission, $1,200. And I know for a lot of you traders, anywhere between 5, 6, 800, 1,000, 1,200, this is what you want. So your goal in trading in futures is not to take as many trades as possible. It's not to see all the trades that come along and take every single one of them in the time period you're trading. Your goal is to find 1 or 2 good trades. And this is really important for those of you who overtrade. And I know I'm speaking to some of you here tonight. We got a great turnout. By the way, if you just came in, one more note, we are recording it, and you'll get a recording in the morning, okay? Or 2. And I'm going to put this in caps. Great trade entries. And take as much maximize profit. And done. Now, if you have a profit goal, the other thing to do is obviously try to achieve your profit goal. So how do we do this? Once we get our profit goal, we're playing with the house money. What should I type in here? We're playing with house money. I think you just keep going. Take on more risk. Leverage up. If you're trading 1 or 2, go to 3 or 4. Heck, you're up $900. It's house money. Keep playing the game. What do you think? Turn off the machine. If you're prone to over trading, you got to really focus on what I'm saying here, because this is going to save your capital. That's what's going to make you money right there. One or two. Now, look, you might look back on a chart later in the day and say, dang, I missed, look at that. After I got out, there was an 80 tick run, and I missed it. But you made 6 bones. I quit right before it just took off like a bullet. I knew it was going to do that. Should you kick yourself and feel bad about FOMO or whatever it's called, fear of missing out, or retroactively looking back on it? You don't know whether you would have caught that trade, do you? Really? Maybe you wouldn't have caught it. Maybe you would have got in late and stopped out. Please heed these words. If you take anything away from tonight, other than these good trade entries, you got to find 1 or 2 good and nail it and be done. Achieve your profit goal as quickly as possible and turn that machine off. That's a valuable piece of advice right there for you. There will always be more trades in the future. That's right, Aaron. All right, let's move on. Some of you wanted to see crude, and we're going to do that right now. And then some of you wanted to see gold, and we're going to do that next, okay? All right. All right, let's get a crude chart up here. And I'm going to do a quiz. I'm going to do a series of exercises where we're going to work together to see some trades, okay? Here we go on crude. Are you ready? I got a crude chart up. We're going to do some trade exercises together. We're going to help you develop a little muscle memory to see the trade setups. We'll do it together. And then you can do some yourself, okay? Here we go. All right, so here's crude from this morning. And let's get our sort of wits about us first before we do this. So here's midnight Pacific time. Adjust that to your local time, right? Here's the European trading session, trading crude. Looks like you had a little up move here on a mid-band bounce. So that might have been a long trade if you in the market. Background's green. Comes out, takes out a stop, pulls back. You get sort of a minimum criteria trade. That's not a mid-band trade, but it had a nice drop. And then here's 530, 526, 553. So this would have been right about when Gary is opening the live trading room, right about in here. Now, from this point forward, I'm going to ask a series of questions, and then we're going to do an exercise together. You look at the chart tomorrow morning on crude, and it looks exactly like this. What kind of trades are you taking, long or short? 553, you fired your charts open. They've been up 20 minutes or whatever. You got your coffee. You're ready to trade crude. You're in the live room, and Gary's getting everything set up. And the market tomorrow morning looks like this. 5 seconds. L, are you taking longs? S, are you shorting it? 4 seconds. Type in a letter. L long, S short. 3 seconds. Crude oil tomorrow morning looks just like this. What are you going to do? 2 seconds. This is how quick you want to be able to get your muscle memory going in the morning, right? Kick those cobwebs out. Take a couple sips of warm coffee and get ready to take some crude trades. L for long, 1 second. What are you doing? What are you doing with crude here? Or any market. You wake up and gold looks like this. What would you do? Time's up. Long only. Here is we're just coming off of the thrust right here. And so we can clearly see that we took out the swing levels from the short. We broke up. The background is green. The mid-band and all the bands are stair-stepping up. The bars are predominantly blue. Now, even though the market has peaked at 58.16, with our spidey sense awake and our little trader brains are pumping from the espresso you got from your new espresso machine, right? You got all your espresso ready. You got a little croissant all warmed up, ready to go, sitting right there, and you're ready to take a trade. Where would you take it? Where are you going to take it? What area might you take it? You can put a number or an area in. You're thinking ahead. You're thinking ahead. You're remembering the words from tonight, and you're saying to yourself, oh, yeah, we are retracement. We're pullback traders. We have to patiently wait for a trend to unfold, and then we're going to pick our spots to take trades. So now you're anticipating. Anticipate to participate. We had one of our great traders came up with that phrase about 2 years ago. Anticipate to participate. Well, if you typed in the word mid-band, or you said anywhere around 92, if it gets anywhere 92, and you hear this in the room a lot. So those numbers, as you learn the system, are not just randomly picked from thin air. Everybody knows that, right? Everybody can clearly see. And I'm going to do the first one like this. And the next ones I'm not going to do like this. I'm going to kind of help you a little bit. So where's our sweet spot? Let's think about it for a second. We said our sweet spot is here. And the mid-band is sitting right here. So if you said to yourself, boy, it would be nice to get a bounce off at 92, and somebody in the live room might say something like, if it gets anywhere near the mid-band at 92, I'm buying to look to get long. No, I'm not addressing that area, Louis. This is in the pre-market. I'm talking about getting ready to trade the pit open. So we're not looking at this right now. We're focused right here on the right-hand side of the chart. Okay? All right, good. All right, good. So now, not only have we observed, we've done three things. We've identified the fact that we are in an uptrend and we're looking for longs only. The pit's getting ready to open. We're in the live room. We have our charts ready to go, and we've already identified a sweet spot area where we would look to get long if it comes to it, right? Now I'm going to do an exercise with you together. Here we go. When would you pull the trigger? N for now. How about now? How about now? Are we in the sweet spot yet? Okay, I don't see any yeses. Okay, how about now? Okay. All right, let's do a couple more. How about now? Let's do that again. Okay, I don't see anybody typing anything now. I don't see anything typing anybody now. Okay, how about now? How about now? How about now? How about now? See the toggling exercise I'm showing you? See how that helps you see it? You know, let me give you another, let me do this. Let me do this. What if you did this? And this doesn't always work, but it might help you a lot. When these bars come in here, you simply put a buy order at the top of band 5. Like this. If it breaks there, you're long. How about that? What do you think? You just do something that simple. I mean, literally that simple. When the bars are down in here, you put the buy order here. That's it. It closes above it, you're in it. Now, there will be an occasion where it will break up and it'll flip on you. So what do you do on that? And what do you do if it breaks up a couple of bars and then, boo, it rips right through it? Well, when you're filled, let's say hypothetically you have one lot on here. Well, of course you're going to put your protective stop right here. You can see that, right? Just right under the swing. You're protected, so you limit your downside risk. But let's say it starts to flip on you and starts to really tank. Can you hit the close button? This thing rips against you. Can you hit the close button and just get out and break even maybe? Of course, we teach that, right? So Gary has a saying, and I like this. This is an old saying he came up with years ago. It's you shouldn't really feel much heat when you enter these trades. It should pretty much immediately move in your favor. Like right here, you can see the crude pop, and immediately you come up and you hit almost the high of that trading range right there. So not only did you get a scalp, but now your renter is engaged right here if you had a 2-lot on, right? Here's the stealth in line 6. Here's your run it. So this initial sell stop is already ratcheted up to here. And if you put a 2-lot on, you came just shy of the swing at almost 16. So that's actually closer to 20 ticks. So if you had a 10-tick target, that was taken out right here on your scalp, and then you get stopped out right here if it comes back down through it. No, it doesn't do it. It keeps going. Look at that. Well, you ratchet your stop up, continue to ratchet the stop, ratchet the stop. And it looks like it might have eventually got you right here. Right there. Well, let's see if it closes below it. This thing's really fighting me today. No, still going. This really turned into something, didn't it? Look at that. See how I'm showing the trail go up? See it? Following this trail, following the trail. Okay, here we go. See your sell stop? It's your sell stop. You're following it up, following up, following up. And then you get a close through it here. So actually that would have been the final stop out right here. So that was a pretty good trade. How many ticks did you get on that? You got out at 24 and you got in at 98. And you got your scalp off here. So you got, 10 ticks. So that's one bone on that. And then you got from here to here is 26. So 26 plus 10 is 36, $360 on that one trade. How many of you would be done? One trade on crude, right at 610, between 605 and 610. You took the trade right here when it closed above band 5 on a limit order or a box. You got your 10 tick scalpy off here. And then you trail, and it eventually took you out on a stop out on your runner up around 24-ish on that pullback right there. Some of you saying, yeah, I'd be done. Good. Good. Everybody see that? All right, now I'm going to completely clean this chart off, and let's do another one together, but I'm not going to help you so much on this one. You ready? Here we go. I'm going to clean this puppy off. Remove all drawing objects. Everybody's good. I'm going to clean this pup now. There we go. Nice and clean. Take our orders off. Okay, now we're flat. And now it's 646. Let's suppose you didn't get that trade. Whatever. You slept in. You came in late. You fire it up. You get in the room. You see everybody's in it and trailing it. You don't chase it up here. You know that, right? We know that. We're not thrust traders. So if you came in late, let's say hypothetically you missed the open, and it's like 6:15, and you finally firing everything up, and you see that the trade had already fired from down here. You know not to pull the trigger here, right? Everybody knows that, right? We're not chase. We're not thrust chasers, right? All right. So now you're watching it, and you got your spidey sense on. Now this next trade, you're gonna type in an L when you're ready to pull the trigger. Okay. There we go. Now we're at 6:46. Okay, we're dinking around here at this 25. 6:49, so that's 4 minutes later. Okay, 6:50. Let's blow up the chart real super duper big for your bars. You want to do that so you can clearly see what's going to happen with your bars, right? Okay, let's do this. We're doing this one together. I'm not helping you. You got to see it. When you're ready to take along, you hit the L button. All right? We're at 6:52, so just a few minutes before 7 o'clock. Okay, there's 6:52 right there. 6:54, so that's a whole 2 or 3 minutes for these bars to form. It's not like seconds, it's minutes, right? It's minutes. 6:54, and there's 6:56, so 4 minutes. And there's 6:58, 6 minutes. Okay, let's do that again. Okay, there's 6:52, 6:53, 6:54, 6:56, 6:58. You see it? You see it now? See I'm toggling back and forth? That's the muscle memory we're talking about. Where's the sweet spot? What bars came in to give us the buying opportunity? Where are they? Are they here? Is this them? Is that them forming right now? Now we said you either draw the box, and if you don't have time, you had 4 minutes, but let's pretend you didn't have the time. Could you put the buy order where we put our buy order? Put our buy order right at the top of band 6. So as this bar came up through here, you're filled at 16 long. Where's our initial stop? Down here, right at the midband, right? You're long, so your protective stop is right down here. In case it bips it down in your face a little bit, right? Where is your scalp target? 10 ticks up. You're filled at 16, so you can manually put a sell order at 26, which would be right here. Or in the case of Object Trader, it would automatically do that. How many of you got that one? How many of you got it? How many of you saw it and got it? Everybody see it and get it? Are you getting in a little earlier now? Are you seeing them? You seeing a little bit better? Is that helping you? You see, you got to get in here now. You can't wait to here. Here's where you should be taking your scalp money. If you're taking trades beyond line 6, that's too late, right? That's too late. Let's do another couple bars. Okay, there we take out your scalpy. See it? Scalpy off. Filled. And I forgot to say that if on our methodology that we teach, this was actually 2 initially, right? This was 2. OT puts it there or you put it there. Either way, however you do it. Remember to put your stops if you're manually trading this. If you got object trader, it's no problem. The box took care of it. All right. Now you only have 1 contract. Do you still leave 2 on down here? Okay, you manual traders with the limits, what are you doing? What do you do with this? Do you just leave 2? Well, if you left 2 and it ripped back down for some reason through here, what would happen? You'd be filled short. You don't want that. You got to go back to 1, right? There's your runner. Now here we watch, you see line 6 and stealth coming up. This is your trails. So let me show you how you do that, right? So here's your trail coming up. There's your trail. See it? In the beginning, you leave it a little bit loose. The reason you want to leave the trail a little bit loose is because, see right here? See how you wick right down, and sometimes it'll wick right on that line 6 in stealth. It'll just wick it, or it'll just bump it a little bit. So what I'm saying is if your trail's too tight like that, a wick of a candle or something can take you out, and you miss, if there's another 20, 30 ticks, you leave that on the table. Yeah, you got to follow it, but leave it. That's when in the room, sometimes I'll say leave it a little bit loose. So when I say loose, that's what I'm talking about. In this case right here, in this example, if I was to say fade line 6 and stealth by 3 ticks, what I'm saying is take this trail off of here by 3 ticks. So you don't put it right on here. You put it slightly behind it so it can move a little bit in the beginning as it's moving, like the first 10, 15, 20 ticks. Now look what happens here. It continues to head up, continues. We ratchet our trail, trail's following it up. Okay, by this point, we got filled long down here at 16, and we're up here at 60. So how many ticks have we run? Here's our entry, 16, and we're all the way up here at 56. We've run how many ticks, roughly? 40-ish, right? Now, when a market starts to go 30, 40, 50 ticks, is that a time to keep your trail nice and loose? What do you think? Down here, as we were taking off, no, you start to ratchet up tight, right? You start ratcheting it up tight. So you start to get more aggressive with your stop posture. Sure enough, you got taken out right here. See it? Gotcha. All right, so here was your scalp trade. So you got 10 ticks on this. So this is 1 bone in your pocket right there. And then here's your runner. You went from 16 all the way up to, well, where'd you get stopped out? 51. Oop, it got filled. Oh, I better be in sim. Stand by. Stand by. Oh, I should have checked that before I did this. Oh, it's in sim. Good. All right, I got to hit the close button. That was good news. It was only 1 tick. It was only $10. Didn't hurt anything. And it was sim. So you see the scalp and the runner. Everybody sees the scalp and the runner. So this was a good trending day on crude. You had 2 beautiful trade entries here. One right after the pit open, which was down here. We talked about that, where to enter, how to get in, how to manage it. Trade number 2 was here. You got 40 ticks on the runner and 10 ticks. You got 5. That's 5 bones on the 2, right? Everybody starting to see that? Charles, sometimes you don't get the full 10 ticks, but you get 6 or 8. How do you decide when to get out? It depends on the instrument, Alan. It depends on the instrument. A long, good running day like crude in an uptrend, you should pop 10 ticks very easily. In ES today, for instance, at the open, it was like in a 12-tick range. You got to go with the lower. You got to pop like 4 or 6, get out, and then try to get a runner or put your target at the top of the range. So ES tends to be smaller. On big runs on gold and crude, you can go ahead and go for the 10 ticks on the scalp and then trail your runner. Okay? Yeah, okay, cool, Gene. Gene's actually trading ES right now. Good for you. Good for you. Oh, cool. Gene says, I was watching the ES chart as you're showing and instructing these trade setups, and I actually took a trade and took $100 off the table. Good for you. You can do that, right? I mean, after hours, if you're just kind of sitting around, you finish dinner or you guys had some lunch or whatever, and you got an hour break, put it in sim. Do some exercises. Look for some trade setups. Practice, practice, practice. All right, one more deal, and then we're going to wrap. Are you ready? Gene says I do my practice every night. Excellent. That is so cool. All right, I'm going to clean the chart off again one more time. Here we go. Drawing tools, remove all tools. Okay, clean. All right, this is the final exercise. Is everybody ready? Here we go. Beginning of the final exercise, and then we're going to wrap this up, okay? All right. So here again, the trend is up. We're looking for long trades. We've already had 2. And the room is still open. It's 7:16. That was trade 1, if you recall. And trade 2 was right here, which just stopped out. Up here, remember? The tight, aggressive stops. You finally got out up here, right? All right. So now we are waiting for retracement to get long. And then when you think you're going to get long, you type in N. Here we go. 7:16, 7:17, 7:19, 7:20. Looking for longs. Looking to get long on crude. When you think the bars are ready to get long, you type in L or N. Either one is acceptable. Okay, let's do that again. 7:16, 7:17, 7:18, 7:19, 7:20, 7:21, 7:17, 18, 19, 20, 21. See how I'm doing that? See how I'm doing it? Nice and slow. 17, 18, 19, 20, 21. Good. Now don't be a late bird. Now here's what I'm going to show you. On the two ways to do this, of course you see that you could have thrown a box on here. You had like a minute or two to do it. You could have boxed it using Object Trader tool right here. And you would have been long on a close above 37. You could have put a limit. So let's do it this way. If the bars are located, and this is going to greatly simplify the, I don't want to call it confusion, but I think a lot of you and some of you might be, like, well, I'm not clear on where you're saying to get in, Charles. So let me clarify. If the bars are hanging out in here, we said to put the buy order or your box so you get filled at the top here, right? Success rate's very high, David. And a trending market is you got to have a trend for this. Just to be clear, these are called mid-band retracement trades in a trend. So whether it's up or down, there's a very high success rate. I'd say it's as high as 75, 80+%. There's occasionally something like a tweet might come out or market might flip, but we've trained everybody to get out quickly so you don't get burned. You might get popped for a break-even trade or a loss of a couple of ticks. But when you get big 40-tick runs, it more than offsets that. Now what we're going to do is that if the bars hang out down here, then you're going to want to get in on a break of the mid-band. This is still acceptable, but it might be late. And if you can do it, you box it or you put the buy order right here above the mid-band. By the way, this is the same thing, David H. We've been teaching for like a long time. I'd say the better part of the 10 years that we've been in business, we've taught this methodology. In the first year, we traded time-based bars, and we didn't have the OT tool. But after OT came along, we've been teaching this method, retracement, for a lot of years. 9 years, easy. So I don't think it would have that much longevity if it didn't work. So it obviously works. The key is to learn how to do it, and the key is to understand your instrument and where you want to get in and take those trades. Because once you nail a good entry, everything else flows from there. Right? Here we dink around. You had plenty of other time. If you didn't take it here or here, you could have reboxed it right here, or put another limit order in if you were just not paying attention over here, and then not by hook or by crook, you're long. Several chances. Dinked around there for about 20 minutes. You can clearly see that this area held right here. As long as this area held, this is where your stop would be. Your sell stop would be under here. Right, like that. So there's your 2 entries, and there's your sell stop. Let's see what happened to the trade. Well, if you're filled from this one, 48 would be your scalp. So if you were filled here and at 51, for instance, here, all of these pops here would have given you 10 ticks. So depending on where your fill was, that would have been a scalp, that would have been a scalp, and this would have been a scalp. Checks it again, and then it takes off. So you had 1, 2, I would say 3 and 4, and 5 opportunities to get in this trade as it dinked around right here. Any one of these trade entries, and some of them, if you put, well, over here, you definitely got the scalp. You wouldn't have got the scalp here because that didn't go below the midband, so that didn't come out. And you didn't get well, you might have got a scalp there. And you definitely got a scalp here, 10 ticks. So 43 to 53 would be like that. And then you engage your trail for your runner. This initial stop is 2. And then you engage your trail for your runner on your sell stop, and you trail it up, and you trail it up, trail it up, trail it up, and it probably got you right here. Somewhere in there. Oops, I'm filled again. Ha! I am sim, though. Yeah, sim. All right, I'm going to go ahead and stop the recorder. Are there any final